Today is Sunday, March the 13th. Let's take a look at the Mcclellan Oscillator. And you're getting choppiness on either side of the neutral line, which means that the bears can't take us into overbought. The bulls, except on this one day here, took us into oversold. But it's been pretty much since the beginning of the year, bulls and bears sort of fighting it out almost on a daily basis, one winning one day, one the next day. Let's look at the charts because I want to look, well, first let's look at the Summation Index. The Summation Index is simply you take yesterday's Mcclellan Oscillator and you add the change today to get a number. And if you have a lot of negative days in a row, then you're getting a big negative number. Look what's happened since we've been tracking it here since January of last year, and we had one little dip here which caused this downtrend right here in the S&P, and now we have another one. But look how steeply the Summation Index has dropped. But at least the Summation Index now is starting to flatten out, meaning that maybe we've reached a point of oversold. Let's look at some harmonic patterns in the three main indices. These are what you call Gartley patterns, and the Gartley tool that you have in Mode of Wave, which you just click here and you highlight an area and it will find you Gartley patterns. So the pattern that it found is this one, where the starting point is here to a peak here. Then this pulled back to the 200, which is a significant point to bounce. We're going to call that B. The bounce, if it stops at 13% or at this point here, anywhere in this gray zone right here, that would be a shark pattern. Shark patterns call for a reversal. 13% would bring you down to here, and that's where you're getting most of the action. 61.8% would bring you here, and it can go even further and still be a shark pattern. But look, we almost touched it one day, and now we're back into the 13%. So you could say that we've had a completed shark pattern, which now should result in an up, down, up, A, B, C, D move. Let's look at the NASDAQ. Do we see something similar in the tech-heavy index? Here's X, here's A, and here's B. The pullback is 88.6, and that's called a bat. I didn't name them, but it's called a bat. And a bat says that you could pull back to this point right here, which is 261 of B, C, or 0.886 of XA. So those are the two, and this one right here. So those are the likely points of pullback in a bat pattern. We pretty much had it here. If you take this one, we went a little bit lower, still within bat pattern. Okay. 161.8 would have been right down here. We almost hit it. Now we're moving back up. So that could be a completed pattern, and now we should see an up, down, up move if it continues to trade as technicals do post-Gartley. The SPX does something very similar, where X is here, A is here, B, and then the bounce from B could come up to 61.8%, and that would be called a shark pattern. 61.8, we didn't quite hit the 61.8, but we are within this gray zone of X and A. Now the pullback would be determined to be 2.24 of BC. And where did we go? We hit it pretty much dead on. And we bounced back to get resistance at the 200 and a drop back. Now what is very concerning is this death cross, where you have the 50 about to cross over the 200. And that would be really bad. When was the last time we saw that? Let's go back and let's look for, here's a golden cross. And when we had the golden cross, we saw the market just zoom up. Let's look for the death cross. Whoops, sorry, cancel. Let's look for a death cross. Here is one here. And the market did go down, not tremendously, but and it pulled back up, came back to test the 200, up, back to test the 200, up, back to test the 200, up, down, death cross here, big drop, and this is your COVID drop. So death crosses are something to be feared, and we need to keep our eye on that. Do we see a death cross in the Dow Jones? We certainly do. So while the technicals say we might have an opportunity to bounce, that death cross has got to scare the hell out of anybody. We don't want that to happen. So keep an eye tomorrow for the market, and we've got the death cross already in the NASDAQ. Let's look at NASDAQ and let's see what death cross tells us. Here we had a near miss. Here we had a little death cross right here with a bit of a drop. Support on the 200, 200, 200. Dropped on the 200. And then we haven't tested the 200 since then, except in January, and we fell through the 200. So last death cross was really way, way, way back. The NASDAQ has not had a death cross, really, except for this minor one in 2008. 50 pulled over the 200 in 2009. They touched here, they touched here, they touched here, they ran parallel, they ran together here, and then the 50 is always running above the 200. We have not had a death cross in the NASDAQ since 2008. Let's look at the S&P, because that's the one that's coming. Looking back, we've looked at some of these. See how they parallel the 50 and the 200, 50 and the 200. Death cross right here, a drop, parallel. The 200 is always going to be your support when it comes to the S&P. It quite often is. Here's a death cross, and we did have a big drop here. That is COVID. And the 50 pulled back up, and then we had this bull run. So the death crosses, we need to be watching for the S&P, watching tomorrow for the Dow Jones, and we're already in a death cross pattern for the NASDAQ. So the Gartley patterns, I forgot the other word, the geometric patterns, there's a different word for it. Anyways, all showing us that we've reached a bottom, but we may redefine those. We really look at the moving averages as being a stronger indicator for us. Apple, support on the 200, support on the 200. IBM, let's get rid of the Ichimoku here just for some clarity. And let's look at its 50s and its 200s. And we have the 50 crossed over the 200 right back here in October. Big drop. The 50 is not able to break the 200 still. They came up to touch and then moved back down again. So still bearish for IBM. Let's look at our key bank, JP Morgan. JP Morgan has this perfect pattern, X to A to B to a 61.8 bounce. That shark pattern predicts a drop down here. We got it. It could predict a further drop, and we've got it. And now we're still in the gray zone of this pattern, and it's bouncing up. So these patterns are completing, but we also have a death cross in the JP Morgan. That's not very good. The XLF looks very similar. Death cross hasn't quite happened, but it's starting, 50 starting to approach the 200. Caterpillar. Caterpillar is doing quite well with the demand for wheat and farmers in Europe being asked to plant more wheat than other crops because the Ukraine and Russia are such big global suppliers of wheat. That's going to be good news for Caterpillar, and certainly we're seeing the bounce of Caterpillar. Death cross right here, Golden cross right here, looking for a golden cross this week, but we're above the cloud, Chiku span above the cloud. Do you see the same thing with Deer? Deer didn't suffer as much as Caterpillar on this drop. Deer has really just been channeling, has been performing extremely well, and the 50 never did cross below the 200. So agriculture stocks are where you probably want to be. Let's take a look at Tesla. Tesla looks like the S&P, the 50 coming down to the 200. When did we ever have the 50 and the 200 giving us death crosses in Tesla? I mean, you can go back and look at them yourself. They've happened. They happened here, golden cross, death cross, golden, death, death, golden, big run up. And now we're heading towards another death pattern here. Those are the stocks that I wanted to cover for you, and the market indicators, the big indices. Watch for the 50s and the 200s. That's what I would have my eye on before I decide to step in, or maybe get out. It may be too late to get out of some of these things. Look at the NASDAQ, how much it's dropped. Probably too late. So hold on, but don't add in any more until you see